Hi, everyone. Thank you for tuning in. This is Andrew, and it is, of course, Thursday, April 28th, 2016. I have a litany of articles to share with you today, about three of them, just to be precise. The first one is out of Bloomberg. The U.S. economy expands to 0.5% pace, weakest in 2 years. That's pretty big news. That just simply means that we're continually contracting. Now, the zero point 0.5 is probably not even the correct number. It's essentially the number the government is reporting. So really, you have to kind of take that with a grain of salt. So I'm going to go ahead and scroll down some, read a little bit of this article. The U.S. economy expanded in the first quarter at the slowest pace in 2 years as American consumers reined in spending and companies tightened their belts in response to weak global financial conditions and a plunge in oil prices, as well as due to high Obamacare costs. And that is a little snippet that I added there. You know, doing some editing in this Bloomberg article because I'm not so sure of the writers done their research, nor has the editor. Gross domestic product rose at a 0.5% annualized rate after a 1.4% fourth quarter advance. Commerce Department data showed Thursday the increase was less than 0.7% median projection in a Bloomberg survey and marked the third straight disappointing start to a year. Now, that of course, who knows if these numbers are even correct, because we do know the government has a really bad history of lying. So that 0.5% could just as easily be a negative 0.5%, perhaps 0 or negative 1%. So I'm going to go ahead and move on to the next article. This one is out of Market Watch. The other one is out of Market Watch as well. First quarter GDP shows economy grew at slowest pace in 2 years. So they're reporting this as well. Basically just going on to say that businesses aren't investing as much. I'll go ahead and read the first paragraph. The U.S. economy sputtered in the first quarter, expanding at the slowest pace in 2 years as businesses slash investment by the steepest amount since the Great Recession. And essentially, basically a repeat of the last article, except that this one really kind of details, or it's just another example of what is really going on. It goes on to say further down the article, export-heavy manufacturers facing a tougher global sales environment and U.S. energy producers coping with cheap oil led to a corporate retreat in the January to March period. Companies cut spending on structures such as mining rigs by nearly 11%, and investment in new equipment fell by 8.6%, the biggest drop since the waning stages of the 2007-2009 downturn. Now, with all these different red flags that are occurring, it really is 2008 all over again. Let me go ahead and move on. Really enough is said here. Kind of beating a dead horse with a baseball bat. Continuing to talk about the GDP. Now let's go ahead and talk about home ownership. Rate falls to the third lowest on record. Wow, I guess those overpriced homes just ain't selling like they used to, right? The rate that Americans own their homes fell in the first quarter to the third lowest on record, another indication that worsening finances as well as changing preferences since the Great Recession are altering behavior. The Commerce Department reported that the ownership rate fell a tenth to a seasonally adjusted 63.6% in the first quarter, marking the lowest figure since the 63.5 low in the second quarter of 2015. The ownership rate was 67.8% in the quarter when the U.S. entered recession. Now, you know what I hear? Do you hear that popping sound? That's the real estate market going down. Oh boy, they are deflating at a faster and faster rate as we move towards the end of 2016. I'm going to go ahead and move on to another article. This one is out of Zero Hedge. It's technically not an article, but I don't know if many of you had seen my video last night about the basically collapse in USD JPY. And the Japanese stock market, the Nikkei in particular, uh, took a dive for about 1,000 points. That's right, you heard me. The Nikkei dropped 1,000 points. Now, the Dow Jones futures were down about 130. The S&P was down quite a bit. The Nasdaq. But what has happened since then? At least since this morning, before the markets open in the U.S. session. Well, you have investors panic buy S&P at open, erases all Bank of Japan cliff dive losses. This is just getting really silly here. Essentially, you had a crash in Japan, and the crash should have continued. And of course, this is all manipulation. And if you look at this chart, I don't know if you can see this, but essentially it just shows this huge, and of course I'm pointing it with my cursor, this huge dive right here. And then it kind of bounces around, another pretty big dive. And then it kind of rebounds a little bit, and then you get this massive buy here. And then, of course, this right here, I believe, if I'm understanding this chart correctly, this is when they reported the GDP numbers for the United States, which, according to the chart right here, is worse than 2 years. So, no, the economy has not gotten any better. It's pretty well documented that things within the financial sector are getting worse and worse by the day. You have major banks such as Deutsche Bank coming out and basically detailing the manipulation of gold and silver. So it just, the musical chairs, you're pretty much running out of musical chairs at this point. And we'll have to see what the Fed's response is going to be, after today, whether or not what they're going to do in terms of if this market were to crash again. Now, I believe this panic buying, as many of you probably can guess, that this was totally a response to the crash over in Japan, because they knew that if they did not go into the market and buy up the stock prices and so on and so forth, buy up the indices, that the third wave down would have begun, and would have begun in such a way where it would bankrupt all four of the major zombie banks out there. I believe, how many are there? I know Deutsche Bank is one of them, but there's also a few other ones I can't think of the top of my head. So thank you for watching. Take care. God bless. This is just a quick update on where we're headed in the economy. Take care. Thank you so much for watching, and I'll see you in the next video. Peace.